Today's conversation is sponsored by First Generation Capital Partners. If you're an accredited investor and you want to know about how we're helping other accredited investors keep more of their income, go to firstgencp.com/going long.
There's a lot of paperwork that is involved in the process. Unfortunately, this is a very complex industry, but that's where we come in. We help walk you through that process. We help with the account opening. We will help you with the account funding and letting you know what your different options are for funding the account that we went over earlier. And then finally, the process for submitting the paperwork for the investment purchase.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. And yes, I'm your host, Billy Keels, and I am really excited for you to join today's conversation. Take it in. It's going to be awesome, especially if you're looking for vehicles that give you more control and be able to take more control over funds that you have to get to the lifestyle that you're really looking to lead. So at the same time, I want to thank each and every one of you for continuing to screenshot and share across social media the podcast. We continue to move up the ratings. Feel free to tag us for those of you that are doing that on LinkedIn and on Instagram, on Facebook. Like, it's really, really cool. So we appreciate it, and on Twitter and all that kind of stuff. So tag us because we'd like to be able to respond back to you. Let us know that you're out there. Also, if you want to leave your honest written review as well as rating, love for you to do that on the Apple Podcast platform as well as Spotify. And if you're looking for any of the previous podcasts, just go to firstgencp.com/podcasts, firstgencp.com/podcasts, and you can check out every single episode we've ever done. So with that, also, it's, as I mentioned many times before, it's not about the perfect vehicle. It's about how do you utilize different vehicles to get to your investing destination. Today's another clear example of that, how you can use a very specific vehicle to increase the level of control that you have where you're doing your investing. Today, we're going to have Mindy Gayer. She's going to talk to us about how the self-directed IRA can be one of the useful vehicles for you. And we're going to get to that conversation just after this. Are you a busy, high-paid professional? Someone that in the previous 2 years has earned $200,000 and is expected to earn $200,000 this year? Or maybe if you filed jointly, previously you've earned $300,000 the previous 2 years and you're also expected to do that this year. Or maybe if not, either individually or jointly, you have $1 million in net worth, not including your primary residence. If you meet any of these criteria, then you're someone that the IRS considers to be an accredited investor. That probably means you're someone like an enterprise software sales executive. You may be an executive in a major corporation. You may be a doctor. You may be a lawyer, maybe a high-paid consultant. You may even work for a major sports franchise. The thing I know you have in common is that you continue to do the hard work. Like, you're doing 100% of the work and you're only bringing home 50% of the reward because you continue to get crushed by your income taxes. If you are tired of this situation and you're looking for a new solution, then go to firstgencp.com/going long. When you get there, that's going to help you to start the journey so that you can begin to take back control of your taxes, take control of your time. And then also that means you're going to be able to spend more of the time that you want with the people that you love the most. And that is the way that you're going to get the personal freedom that you're looking for. So if you're looking to take back control, go ahead and go to firstgencp.com/going long and see how we can help you today. So, you know what? If you want to know how managing your long distance investment portfolio options with vehicles that give you more control would be like, then guess what? Today's a conversation that you're going to want to listen to until the very last word. You know why? Because today's special guest not only started her professional career in the financial services industry, she also followed that up by a number of different sales professional experiences in the retail industry, and also other professional experiences that drew on her strong sales skills, communication skills, analytical, as well as influencing skills, which have led us up to today, where she is the Southeast Regional Business Development Manager at the Entrust Group. It gives me great pleasure to welcome to today's conversation, Mindy Gayer. Mindy, welcome to the show.
Yes, thank you, Billy. I'm really excited to be here today and joining everyone on this podcast to share a little bit more about self-directed IRAs and the rules and regulations around self-directed IRAs and how you can incorporate self-directed IRAs into your retirement strategy.
Absolutely fantastic. And I know that everyone is going to get so much value from that, because this is about also being able to ultimately have more control, understanding how this vehicle works, and being able to leverage it most appropriately for your specific situation. I guess just as I'll say that in just a second, but Well, no, as a general statement, the things that we're going to talk about today, Mindy's going to share different concepts and examples with us. So the things that she's talking about, you definitely want to make sure that you speak to your tax professional, your legal professional, and understand how these concepts will apply to your specific situation. So just that kind of stated as an overarching statement. Everybody knows that, well, and Mindy, you know now that you're going to get 5 questions. You're going to get 2 in the beginning. You're going to get 3 at the very end. And so I guess I'd like to go ahead and get started with the very first question, which is help us understand, Mindy, where is it that you call home in the U.S.?
So I call home Nashville, Tennessee. Our company is actually headquartered in Oakland, California, so the San Francisco Bay Area. But home for me is Nashville, Tennessee. And for those of y'all who are not familiar with Nashville, we are also known as Music City. So this is the heart of country music specifically, but in general music as well.
Yeah, I was a really, really long time ago. Like I'm dating myself here, but 1996 was the last time that I was there physically. And I was just amazed at the amount of music, right? Because I knew there was a lot of country music there, but wow, there's just a massive mecca of music in general. So it's pretty, and that was a long time ago, by the way. So
it's crazy. So the variety of music that is on Broadway. So Broadway is the strip of bars essentially where everyone goes to listen to live music. The talent there is it's phenomenal. You can go to pretty much any place at any time of the day and hear just some of the most amazing music. So I love it.
Which is awesome. So appreciate you sharing that. And then the other thing that, Mindy, I'd love for you to share with us, what's the most positive thing that's happened to you in the last 24 hours?
Yes, that's a really great question because I also love positivity. So kind of a quick backstory. Several months ago, I was wake surfing and I had a wake surfing accident. And I got the rope tied around my knee, tore my ACL, sprained my meniscus, and sprained my hamstring. Fast forward, I just had ACL surgery about 4 weeks ago. So this morning I went into physical therapy and I am ahead of schedule of where I should be post-op. So I was really excited about that because I'm a very active person and being a little bit handicapped has been not so great, but knowing that I'm ahead of where I should be post-op has been just a phenomenal encouragement to me.
Fantastic. Well, I'm sure you're doing all of the things that you're supposed to and more so that you can get back out to being the best version of you. And congratulations. And thanks for sharing that with us, by the way. This is always love that bit of positivity. I need to just kind of admit something to you as well, Mindy. I am a recovering perfectionist and I have a tendency to kind of keep the bar really, really high. And sometimes it makes me do things that are a little bit, some people would say they're not even feasible, i.e. trying to tell your entire backstory in like 2.5 seconds in the very beginning. Like that's what I try to do. But like you've done way too much stuff to be able to tell it in 2.5 seconds. So what I'd love for you to do is actually tell your backstory in your own words. And you are allowed to take a lot more than 2.5 seconds. I just kind of give myself that as a goal. So if you want to share your backstory with us, and then also if you could share, really some of the major decisions that you've made to get to this point in your journey. And then we'll see where you and I take the conversation from there.
Yeah, absolutely. So my financial background starts from when I was actually 16 years old. I started working at a bank when I was in high school and then moved away to college, worked at a financial institution all throughout college. I then graduated college and started working for AIG Valak, which is the retirement side of AIG. So I've been working in the retirement space for a very long time. Fast forward, I then started working for a PEO company. So I sold group health benefits, workers' comp, payroll, 401k, et cetera. I wanted to get back into specifically the retirement space for a couple of reasons. But number one reason is because I'm very passionate about the retirement industry. A lot of individuals, specifically younger individuals, they're not familiar with how important having a retirement account is. And that, once you're older, even my age group, we might not be able to really count on Social Security. So we need to have a good plan for living comfortably in retirement. So the retirement space has always kind of been a passion of mine. just randomly stumbled upon the Entrust Group. So that's the company that I work for, and read the description of what the company does. And I found it very interesting because I've worked in the retirement space, in the financial space for a very long time. And this concept of self-directed IRAs was all very new and interesting to me. I'd never heard of it before. And I thought, well, gosh, how is that even possible? Because all of my experience and all of that I've known in the past is you have a retirement account, you're investing it in stocks, bonds, mutual funds. That's your options of the types of assets that you can invest in. And so I started researching a little more on this company and companies like the Entrust Group that's out there that are record keepers for self-directed IRAs, and learning about all of the different types of asset classes that you can actually invest in, and the amount of unlimited opportunities that you have when using a self-directed IRA. I will say self-directed IRAs are not for everyone. You have to have a good understanding of the risks and returns because you are your own fiduciary. So fast forward, I ended up accepting a position with the Entrust Group, and I've been with the company for a little over 5 years. Absolutely love it. I hear amazing investment ideas almost on a daily basis, investment ideas that are very outside of the box. I will go into a little more detail on the different asset classes, I'm sure, in a little bit, but the unlimited amount of opportunity that you have with self-directed and the amount of control that you can take over your retirement account is just phenomenal to me. So I've very much enjoyed working for this company and working in this space just because of the unlimited amount of opportunities that you have for diversifying your retirement portfolio.
So yeah, and when you're able to diversify the portfolio and the different types of assets that make the most sense for you, this is, once again, it comes back to the concept of being able to have more control, right? Being able to control the outcome. There's a lot of positives to that, and also, as you said, there's some things that you need to consider. I want to take a step back really quickly because I want to make sure that we make sure everybody stays on the journey with us. There are two concepts, or two kind of, I guess one was a word and one was an acronym. Can you help us understand when you say PEO, what does that mean? Just so people understand.
So a PEO is a professional employer organization. And the way I like to help people understand what that means is it's essentially like a buying group. Think of like a Sam's Club or a Costco, right? You have a membership into this organization and now you have access to discounted items. PEO gives small to mid-sized companies access to discounted health benefits, workers' comp, payroll, 401k. So it's like a buying group. So you're part of this large organization that gives you the power to have the same types of benefits that you would typically have with being a part of a larger organization.
Right. And so the PEOs are typically for your business owners who are looking to be able to provide benefits for their employee base, and they're able to join this PEO. They are then becoming a part of a larger group, so they have access to even more improved benefits than if they were doing that on their own.
Yep, absolutely. That is correct. Yep.
Perfect. So now we are understanding what the PEO is. So appreciate you doing that. Yep. And then also too, Mindy, you mentioned something else. You said, hey, listen, you also, there's the upside to this. And at the same time, you have to also be aware as you are in a self-directed IRA. And you used a word called fiduciary. Can you help, for those of us who may not be familiar with that word, what does that actually mean? And why, or what does it mean and why is that important?
Yes, it's extremely important to understand what a fiduciary is and who a fiduciary is. So typically, when you have a retirement account and you're working with a financial advisor, and I say this typically because it's not always the case, but it typically is the case. If you're hiring a financial advisor, then they become the fiduciary over your account, meaning they are selecting the types of assets that your account is invested in, and they're taking responsibility for the performance of that account. That is a fiduciary. In self-directed IRA space, you, the account holder, are your own fiduciary because you are selecting the assets. Unless you hire a financial advisor, which is perfectly fine. You can hire a financial advisor and your financial advisor can assist you with the self-directed account. But in our instance, a majority of our clients are their own fiduciary. They're selecting the investments that they're investing in, whether it's real estate or a startup company or precious metals or any of those assets that are allowed inside of a self-directed IRA. you're selecting the assets. So that means that if you select to invest in a company that fails, that's not on the custodian. That's not on the record keeper. That's on you as the account holder. So that means that you take full responsibility for the outcome of the investments that you're investing in inside of that retirement account.
There's that word, responsibility. So yes, this is about having more control and more responsibility. So we're gonna kind of go back to basics. We're gonna do a 101 kind of thing here, Mindy, because I know that you will be able to help us in this regard. So you've talked about the self-directed IRA. You talked a little bit about maybe if you could, or you started talking about it, but if you could help to clarify, what is it, and who are the typical players? You've used a couple of names because we want to also help understand where is the self-directed IRA within the different custodians or the record keepers and the fiduciary, et cetera, et cetera. So what is it and who are the players in this space? And then we'll get to when should you use it.
Yep, absolutely. So a self-directed IRA is a retirement account in which the investor has complete control over the types of assets that they're investing in. Now, when I say the different assets that you're investing in, I'm not talking about stocks, bonds, mutual funds. I'm referencing this world of alternatives that you can actually invest in inside of a self-directed IRA. And this is a big misconception in this space. It's not the type of account that dictates what types of assets you can and cannot invest in. It's the custodian that you have your money with. So the record keeper or the custodian that you have your money with is what dictates the types of assets that you can invest in. And what I mean by that, for example, let's say, you learned today that you can invest in real estate inside of your self-directed IRA account. You want to invest in a single family home because the caveat to this is it has to be for investment purposes. So whatever assets that you're investing in, it must be for investment purposes. It can't be assets that you are personally going to be using, that you are going to gain personal benefit from, et cetera. It has to be strictly for investment purposes. So you learned today that you can invest in real estate. You're going to buy a single family home. You're going to rent it out. This is for investment purposes. And you have an IRA account at, let's say, TD Ameritrade or Charles Schwab. So you go to TD Ameritrade or Charles Schwab and say, I learned today that I can invest in real estate inside of my IRA. I'm ready to get started. They're going to say either one, no, you can't. Or they're going to say, pay the penalties and taxes. Here's your money. Go invest. And the reason for that is because they don't hold alternatives. They hold the stocks, bonds, mutual funds, the traditional type assets that a majority of people think that your retirement accounts need to be invested in. Self-directed IRAs, a true self-directed IRA with a custodian that holds alternatives allows you to invest in this whole world of alternatives. And there's really only 3 things that you cannot invest in inside of a self-directed IRA. That's life insurance, collectibles, and S corporations. So if you think about it, that's your 3 limitations. So the spectrum of what you can actually invest in is so broad and so robust. You have so many options. So the self-directed IRA space allows you as the investor to pick the different types of assets that you want to invest in so that you can further diversify your retirement portfolio, so that you can invest in assets that you know and understand the risks and returns that are associated with it. Again, you're your own fiduciary. You're picking the types of assets that you want to invest in. Again, self-directed is not for everyone. If you have no idea about what you're investing in, you might want to think twice about investing because you are your own fiduciary. So it's important for you to understand the types of assets that you are investing in because you take on full liability for those assets that you're investing inside of your retirement account. Again, unless you hire a financial advisor, then they could take on that fiduciary responsibility. But the key is self-directed allows you to take control over the types of assets that you're investing in.
Okay, fantastic. So now we understand what it is, gives you more control. It provides you with the options, with the exception of the life insurance, collectibles, and S corps. It pretty much seems like a pretty wide gamut. Who are the different players that someone would need to be involved with if you want to have a self-directed IRA?
Yep. Great question. And I did just want to mention, so we talked about the spectrum of what you can invest in is very, very broad with those 3 limitations. there are a group of individuals and entities that your IRA is not allowed to do business with. And the IRS has called these individuals disqualified persons. A disqualified person is going to be yourself, your spouse, your lineal ascendants, descendants, their spouses, financial advisors, managers, beneficiaries, or any entity where you or a disqualified person have 50% or more ownership. So what that means is your IRA is not allowed to do business with any of those disqualified persons. So that means no buying, no selling, no transferring ownership, no providing goods or services between your IRA's investment and a disqualified person. And I'll just real quickly give an example of what I mean by that. Mm-hmm. Let's say, for example, that you want to buy a house. You learned today that you can buy a piece of real estate inside of your IRA. It happens to be a house that your mother owns. She is a disqualified person to your IRA. You cannot buy that house from your mother. But let's say that it's a house from a third party. You don't know them. You're not related to them. Perfectly fine. Your IRA can buy that house. Now, while I said that you cannot do business with a disqualified person, there is one caveat to that. The caveat is you can do business with a disqualified person at the initiation of a purchase via what we call a partnership. So you can partner with absolutely anyone, including a disqualified person, if it's at the initiation of the purchase. So for example, you're going to buy, let's say there's a piece of property, it's $100,000, but you only have, let's say, $70,000 in your IRA. But then your mother has an IRA and she has $30,000 in that IRA. Those IRAs can partner together. The percentage of ownership is established on the front end. Your IRA 70%, her IRA 30%. You're buying those properties together now via a partnership. All expenses are paid at that percentage of ownership. All income goes back into those IRAs at that percentage of ownership. And it doesn't have to be partnering with another IRA. You can literally partner with absolutely anyone at the initiation of the purchase. It just has to make sure that your percentage of ownership is established on the front end. All expenses are paid at that percentage of ownership. All income goes back to each of those individuals or entities at that percentage of ownership. Now, other than that, your IRA can literally do business with anyone other than the disqualified person, with the caveat of the partnership being the exception.
Okay, perfect. So we have that. Trusting that you're enjoying today's conversation. And you know what? If you're tired of getting crushed by taxes and you're looking for greater freedom to be able to choose what you want to do when you want to do it, make sure that you go to firstgencp.com/going-long and see how we can help you today. Let's get back to the conversation. So you mentioned this one scenario. And I'm just thinking to myself, okay, I'm someone who's in a corporate role. I've got my IRA. I've had this stuff that's going on. And now I want to move to a self-directed IRA. The scenarios that we're talking about, is that typically where you're going to reach out to someone like you and the Entrust Group that can talk us through what is possible, what is not possible? Or I like to usually say, how can it be possible? And if it's not possible, then you tell us no. But is that where the Entrust Group comes in, and with the combination of sitting down with our own tax professional as well as our legal professional to understand those scenarios? Or maybe if you can help that person that's trying to understand, okay, well, where exactly, who does what, and how are they helping me to understand what I can actually do?
Yes, that's a really great question. So there's different. So the main thing is, how do you fund your self-directed IRA, right? Where's your money coming from? How can, and what money can you use to put into a self-directed IRA? So individuals who have old 401ks, so a company where you're no longer employed, let's say you left a company 5 years ago, that money's just been sitting there, you haven't rolled it into a new plan, you can move money from any old 401k plan into a self-directed IRA. If you're still employed with a company where you have a 401k, and it doesn't even have to be a 401k. Let's say qualified plan. So 401k, 403b, 457, TSP, any type of qualified money can be moved into a self-directed IRA if you're no longer employed there. If you're still employed there, you want to contact your plan administrator to see what your options are for rolling money into a self-directed IRA, because a lot of times plan administrators do not allow you to access that money until there's been a qualifying event like separation of employment. If you've rolled money into that plan, you might have access to roll that money out. But typically, again, it's always a good idea to contact your plan administrator. Now, if you have money in any IRA, so that can be a traditional IRA, a Roth IRA, a SEP IRA, a simple IRA, even ESAs, HSAs, and solo 401ks, all of those can be self-directed. So there's 7 different types of accounts that can be self-directed. But if you have any IRA at any institution, you can typically transfer that money into a self-directed IRA, because we are the same as, let's say, a TD Ameritrade Charles Schwab in regards to we're doing the record keeping and reporting to the IRS. So when you move money to a self-directed IRA, it does not create a taxable event, right? Because you are still keeping your money within an institution that's doing the record keeping and reporting to the IRS. So any IRA can be transferred into a self-directed IRA. Any old qualified plan can be rolled over into a self-directed IRA. You also have the option of making contributions as long as you're eligible. You need to talk to your tax advisor to see if you're eligible to make contributions, but you can also move money into a self-directed IRA via a contribution. You can also do a combination of those 3. So let's say you have a small IRA, you have an old 401k, and you're also eligible to make a contribution. You can consolidate all 3 of those into one self-directed IRA and fund your account that way. You can also partner your IRAs together to buy assets as well. So that's also an option. So let's say you have money in a traditional IRA and money in a Roth IRA, but you don't have enough money in just one account to purchase your investment. You can partner those 2 accounts together. As long as, again, it's at the initiation of the partner or of the creation of the asset. And as long as a partnership is established on the front end, all expenses are paid that way. All income goes back into those accounts at that exact same ownership. So that's really the 3 different ways that you can fund a self-directed IRA.
Okay, perfect. So it's very helpful. And once again, it's just this goes to the point that I like to share, which is it's just about being exposed to the right vehicles, understanding how those vehicles work, and then most importantly, being able to tie these vehicles into the benefit that you're looking for as an investor. You mentioned earlier, Mindy, that this is a vehicle. It's not for everybody. It can be for a very specific person. And I think part of what you talked about before is this may not be the right vehicle if you don't really know what type of asset class you want to invest in.
Yes.
What else would you say beyond that would maybe deter someone from saying, well, this is probably not the right thing for you until you can get clarity on A, B, C, and D?
So a couple of things. Number one would be, do you have enough money in an account to purchase this type of asset that you're looking to purchase? If you are not sure, there are a lot of different options, right? You can partner with someone, you can partner with a disqualified person, you can partner with anyone. But really the main thing is understanding that you are your own fiduciary and making sure that you're doing your own due diligence on the types of assets that you're investing in. That's really the key main important piece here. And then just understanding what a prohibited transaction is. So again, a prohibited transaction is going to be when your IRA is doing business with a disqualified person other than at the initiation of a purchase, or when your IRA is doing transactions that's not allowed by the IRS, or investing in assets that wouldn't be allowed by the IRS. Again, life insurance, collectibles, S corporations, those 3 asset classes are not allowed inside of a self-directed IRA. So it's just important that you really understand that you're your own fiduciary, you're taking on the responsibility of the assets that you're investing in, and then that you need to also understand what the rules and regulations are and making sure that you're not committing a prohibited transaction, because at the end of the day, you're the owner of the account, while the record keeper, us, for example, would be there to monitor high-level prohibited transactions. We're not checking to make sure that you're not staying at the property that your IRA is investing in, which would be a prohibited transaction, because again, you're not allowed to utilize the assets that your IRA has invested in. So really just understanding the liability that it's on you and not the record keeper, because at the end of the day, we're just the record keeper. We're doing the reporting to the IRS and holding those assets on our books so that it stays within a tax sheltered account.
Yeah, perfect. So higher control, higher liability. One of the things I say all the time is you don't get something for nothing. And this is just another example that there are rules, regulations in place. And ultimately, if you want to have something that is self-directed by definition, you have more of the responsibility, more of the burden, and the burden and the responsibility, and also the reward as an investment.
Yep.
So,
and then
yeah, go ahead.
I just wanted to add one other thing that
Please.
Some people don't take into account that's also really important is your exit strategy for the assets that you're investing in. And this is one thing that I do like to share that I find that it's really cool that you can do. So I mentioned that the assets that you're investing in, it has to be for investment purposes. So you can't use the property. Let's say that you buy a house in Costa Rica, or you buy a vacation home in Belize. You can't personally go there and stay in it, right? Because your IRA owns it. Even if your IRA owns 5% of that property, it's still off limits. Everything needs to stay at arm's length. Mm-hmm. But the really cool thing is that once you're of retirement age, you can actually take an in-kind distribution and then personally own that property, because you can never sell the property to you personally, but you can take an in-kind distribution on the property, and you can do that all at once, or you can spread that out over a few years so the tax burden's not as extreme, and then personally own that property and use the property at that point once you fully own the property. So also kind of understanding your exit strategy. So you're not, 10 years down the road, you had planned to sell this to your child, or you had planned to sell this to yourself. Just know you can't do that. But you can personally own the asset by taking an in-kind distribution. And then at that point, you can do whatever you want with it.
Fantastic. So this is about making sure that you have the right team around you, to talk through the scenarios. And as you get into any type of investment asset, also recognize what are the different strategies that you have for exiting that. Fantastic bit of experience there that you're sharing with us. Hey, Mindy, there's this other topic that a lot of people maybe don't take into consideration. A lot of people are investing in the alternative space and will consider investing in real estate, right? Large multifamily or self-storage facilities and all this kind of stuff. And typically on those types of opportunities or deals, people call them, you are using, you're going to go out and you're going to bring in, let's say 30% of the value of a property. Let's say it's a $10 million property. You're going to go raise equity for $3 million, and then you're going to get another $70 million or another $7 million to get to that $10 million property. Well, when we're bringing in our self-directed IRAs, there's a kind of this 4-letter acronym that a lot of people don't understand or don't talk about. But there's two different ones. There's UBIT or UBIT and UDFI. Can you talk to us about, maybe just high level, right? Not a lot of detail, but what are these concepts and why should I consider that if I have a self-directed IRA when I'm considering investing in something that is using some type of loan structure or leverage?
Yes. And that is a very great point. And that is also something that is not talked about as widely as it probably should with a tax advisor. So just to reiterate, we're not tax advisors. We don't provide any sort of tax advice. So tax specific questions need to be directed towards your tax advisor. But when you're using a self-directed IRA, UBIT tax, unrelated business income tax, your IRA could be exposed to UBIT tax if the asset that you're investing in is, for example, a trade or a business. UBIT tax can come into play. Generally, when you're using a retirement account, all of your one of the main benefits of using a self-directed IRA is the tax benefit, right? Your earnings are either growing tax deferred if it's in a pre-tax account like a traditional or a SEP IRA, or it's tax free if you're utilizing a Roth IRA. Now, depending on the type of asset that you're investing in, for example, real estate, that's passive income, it's probably not going to generate UBIT tax unless you're leveraging. And we'll go into that in a second because that is UDFI. So if your IRA is investing in, let's say, a plumbing company that is considered a trade or a business, there could be UBIT tax. It depends on how the income is reported on the K-1. So what I like to tell individuals is talk to the company that you're investing in. Ask their tax advisor or their accountant, how is this income going to be reported on my K-1? And that's going to determine if your IRA is going to be exposed to UBIT tax and what that UBIT tax looks like. And does it make sense from a perspective of, okay, I'm using my self-directed IRA to invest invest, I'm paying UBIT tax. But if I were using my ordinary income, how much additional tax would I be paying? Does this tax strategy make sense? Now, when you're using a self-directed IRA, you can also leverage, meaning your IRA can take out a loan if you don't have enough money to cover the property in full. That is an option. However, since your IRA is not buying the property in full, UDFI tax can come into play, unrelated debt finance income tax. So again, we don't get into tax specifics on that. It's always good to talk to your tax advisor on what UDFI tax looks like, how long you'll be responsible for that, what that rate is, et cetera. But that generally comes in when your IRA is leveraging, or if your IRA is investing in a trade or a business.
That's absolutely crystal clear and so helpful. And also, I just want to reiterate to everyone, Mindy's sharing concepts, examples, ideas. Any of the things that she's talking about, this is where you need to go to your tax professional because they are the ones that have the expertise in this area. And it's just like anything else. It is, and this just shows once again the power of having the right team around you. Mindy used an example of whether or not you want to evaluate whether it makes more sense, even if you do have the UBIT tax that you're going to have to pay. It's the same kind of process that people will look and say, do I actually want to keep this maybe not the best time to talk about it, but do I want to keep my money in a potential type of plan, or do I want to take the hit and be able to pull it out? These are different scenarios that you have to have your team of advisors around you to best advise you as to the different paths that you could take moving forward. And this is just another clear example of that. So, before we get into the going along final three, Mindy, because we kind of need to get into going along final three, tell us about how you're working with clients at the Entrust Group today.
So we're basically here as a resource for talking you through your investment options, meaning if what you're trying to invest in, if that's going to be allowed by the IRS. I will say there are a lot of gray areas in the self-directed space. And when it comes to those gray areas, unfortunately, we're not a legal counsel. We're not licensed legal professionals. So we can't give you any sort of legal advice on, yes, this is crystal clear, this would be allowed, or no, it would not be. We're only here to tell you what the IRS says the rules and regulations are. And then it's up to you to seek additional professional advice on, okay, in these gray areas, what actually can I do and what I am not allowed to do. So we're there to talk you through those, help you with the process in general. So this isn't the click of a button and you've invested like you would typically in the stock market or in the traditional space. Right. There's a lot to the paperwork process in this. So it's 3 basic steps: open an account, fund an account, and purchase your investment. With that being said, there's a lot of paperwork that is involved in the process. Unfortunately, this is a very complex industry, but that's where we come in. We help walk you through that process. We help with the account opening. We will help you with the account funding and letting you know what your different options are for funding the account that we went over earlier. And then finally, the process for submitting the paperwork for the investment purchase. For example, when you're buying a piece of real estate, the real estate is not titled in your name. It would be titled in the name of the IRA for the benefit of you. So we're there to kind of help you through the specifics on staying in compliance with the IRS as well. So that's really where we come into play. We're a resource. We're also educators. So we're here to answer those questions. Again, when it's the gray area, we can't really advise on that. Specifically in the real estate side, there's a lot of gray areas. But that's also, I say self-directed is glorious, but it can also be frustrating because you have so many options. It's glorious, but then it becomes frustrating because there are so many options and there are so many gray areas. So, it's kind of a twofold there.
Yeah. And so this is just, and I know I'm kind of going to say this ad nauseum, but this is why it's important to have a team, right? Because you need, especially when the responsibility is yours, The options are yours. The control is yours. So all the upside is there. But you also need to have someone that, in my opinion, have someone that can help to navigate these kind of, especially the gray areas, right? Because you need an advisor that is there, or a set of advisors, because someone's going to advise you on the legal aspect. Someone's going to advise you on the tax aspect. Someone else is going to help you on the compliance aspect, right? And that's just in this scenario, that's 3 different groups of people. So listen, Mindy, I really appreciate you sharing that with us. The thing is, though, we've got to get into the going long final 3. And the thing is, Mindy, I never ask any of our special guests, and today you're our special guest, the going long final 3, without you telling me that you're ready. So are you ready?
I'm ready.
All right. I knew. I think you were kind of born ready. So that was kind of a gimme, I guess. So we started with you over in Nashville, Tennessee. Although I'm originally from Columbus, Ohio, a Midwesterner, I now call this side of the pond my new home, quote unquote, side of the pond. And so I'd like to kind of bring things back over here as we wrap up. And the first of the going long final 3 is to have you share with us, what is your favorite European city that you've either visited or is still on your bucket list to visit?
Yes. And I get asked this often because I actually do travel a lot. And it's really hard to have just one favorite, just because. So for 2 reasons. Number one, each place that I've visited has its own uniqueness.
Yes.
And the other reason that it's really hard to pick is because I'm very much a mood person. Sometimes I'm in the mood to do a lot of exploring and hiking and just activity after activity. And then sometimes I'm in just a very chill mood where I might want to go to a beach. But if I would have to pick my favorite European city, I'm probably going to go with Santorini, Greece, just simply because it kind of has both of those. It has the very scenic, you can do hiking there. And then it also has like the beach area where you can have a chill day and just kind of relax. So I would say that Santorini is probably a place that I would definitely consider going back a second, a third time as well.
All right, cool. Santorini. I actually have a cousin that just came back from there a couple of weeks ago. So yes, and it's a fantastic place, by the way. I am there in agreement with you, and I can relate. Like I've traveled to 86 countries. I've been super fortunate, and to like have to pick one, it's kind of like, but I get to ask the question, so it is what it is. So thank you for sharing that. So this leads into question number 2, Mindy, which has a lot to do with the things that I've been very fortunate, right, in meeting a lot of extremely successful people. And I consider you to be someone who's very successful. You're continuing to help people broaden their education base and be able to take more control over financial outcomes of their lives, et cetera, et cetera. And so this really has a lot to do with, through these interactions, and recognizing different patterns with people that are very successful. And so hopefully you'll agree with me. Like one of the things that I've noticed with successful people is that they, unlike most people, when they set their mind to doing something, going out to achieve a goal or a plan, they put the plan together and then they go out and then, unlike most people, they just execute relentlessly and they get every single thing right the first time, which allows them to actually go even faster and that was kind of a joke. You're looking at me like, what? Huh? Yeah, it's a joke. It's completely a joke. It's completely a joke. So we're not going to go off camera or anything like that. I like to have fun. Of course, people don't get things right. Even really successful people. Actually, the reality is, Mindy, most successful people, they make like 20 to 50 times more mistakes or failure events, as you said, than most people. This is not a joke. This is serious. I'm going to put serious Billy again. The reality is, every single time that I've seen a successful person make a relevant mistake, or they've told me about making a relevant mistake or learning opportunity, however you want to call it, every single time without fail, when that happens, they stop, they learn from the mistake, and then what they do next is absolutely amazing. They put different strategies, tactics, and actions in place to minimize the probability of that exact same thing happening again. So I don't want you to think about the mistake that you made or the learning opportunity. It's really the lesson that you took away from the mistake. What's that one lesson that you know that we need to hear today here at the Going Long podcast?
Yeah. So I was reflecting earlier about that question. And so one thing that I do regret is not starting a Roth when I was younger. And what that even meant when I was, in my early 20s. And I would say the lesson that I learned is it's never too late. So regardless of where you're at in life, starting a Roth IRA, or even if you don't have any retirement account, just start where you're at and pick up the momentum and just keep it going, because it's never too late. It's never too late to do anything in life.
Yeah. Awesome. It's never too late. You are where you are. The best time to plant a tree was 20 years ago. The next best time is today.
Now.
So
yeah, absolutely.
Appreciate you sharing that. And then lastly, Mindy, is just to help us feed our minds with knowledge. If you could share the one book, and it doesn't need to be a business book, it can be any kind of book. What is the one book that you would recommend to the Going Long family today?
So I have read quite a few books in the past, and the book that just always sticks out, and when somebody asks me for a book recommendation, is it's called Extreme Ownership. It's written by 2 U.S. Navy SEALs. And the book is really about taking ownership of your outcomes, being a good leader. And there are no bad teams. It's the leaders. So essentially the people that you're surrounding yourself with, right? We talked about earlier, having that good support system, that group of advisors, that you're surrounding yourself with. So to me, extreme ownership helps me to remind myself that I'm in control, that I need to take ownership of my outcomes, of whatever happens, whether it's a success or failures. So I would say that Extreme Ownership to me is probably one of the favorite books that I've read in the past.
All right. Fantastic. So don't worry, everybody. If you're running on the treadmill, if you're cooking dinner or whatever, just go. There's going to be a link that's Extreme Ownership. You can pick it up and you can hear the reasons why Mindy really recommends that book to us. And so, Mindy, these conversations, like, they literally fly by. Like, I'm just thinking, we were just started talking a second ago and you're telling us that you're getting started at 16 years old working in a bank, and then you're working for 4 years in college, and you're in the financial services industry, and then you're in this PEO, and you actually broke that down for us. You help us understand what it means and how it's important for small business owners. And then you also helped us realize something that was amazing, because you'd been in this space and then you'd not really been exposed to, even though you were talking about retirement and retirement planning and things like that, this whole self-directed I.R.A. space. And so you're kind of like, wow, even though I was here, why is this kind of thing being held to the side? And you've embraced that and really realized that this is another way to help, another vehicle to help individuals have more control. There's a lot more responsibility, and it's also important to make sure that you have the right teams. But when you are able to have the right teams, you have the right education, and you're very focused on educating people, it gives you an unlimited number of possibilities. I think maybe there are 3 different types of things you can't include in this, and maybe some different prohibited parties, but also that's part of the education that you're helping us with. Exactly. And you've helped and shared with so much information today. I know everybody's like, Billy, just be quiet and ask the question. So here's the thing.
I do have
everybody wants to know. Wait, you want to, I was just going to say, everybody wants to know how they can get in touch with you.
Oh,
are you going to tell everyone how to get in touch?
Yeah, I want to share one fun fact about self-directed IRA. So they did a survey several years ago, and it was like 97% of Americans were not familiar with self-directed IRAs, which is that's mind-boggling. Yeah. But that's also why companies like us are out there helping spread the word and providing the education and joining podcasts, sharing about self-directed IRAs and what the options are. So I love it.
Well, I think that's awesome. I did an episode not too long ago, a solo podcast episode, and I was saying that you're talking about 3%. So maybe I'll use that in a future solo episode. But even 63% of Americans, when the survey was done, didn't even know in the traditional like IRAs or qualified plans, they didn't even know where their money was invested. So if you are in a self-directed, there's a pretty high probability that you know exactly where your retirement plan is invested. So that also helps to move that away from that 63%, which to me was also just mind-boggling. Mm-hmm. Thank you for that 3% number, because I'm sure that I will use that sometime in the future. Anyway, Mindy, people want to know, how can they get in touch with you? How can they find out more about what you're doing at Entrust Group and see how you can help them?
Yep. So there's several different methods to get in touch with me. So you can go to our website and go to location, and all of my contact information is on our website. So just theentrustgroup.com. I'm also on LinkedIn. So feel free to reach out to me on LinkedIn. My email address is mgayer at Entrust, ENTRUSTGROUP.com. So mgayer at theentrustgroup.com. Or you can call me on the phone. You can also text me. So you have many different options for getting a hold of me.
All right. Fantastic. Well, listen, Mindy, really, really appreciate that. Also, everyone from the Going Long family, when you reach out to Mindy on LinkedIn, leave her a personalized invitation. That way, it's going to be so much easier for the two of you to connect because she's going to know that you've already invested time listening to her and she's already helped to educate you. So just make it a personalized invite, please. It's just, it's kind of a pet peeve of mine. So anyway, so listen, Mindy, I really, really appreciate you deciding to invest your time with me and the entire Going Long family. So thank you very, very much. Really appreciate it.
Yeah, you're very welcome. I was happy to join and share with y'all self-directed IRAs.
All right. Fantastic. And listen, Mindy, if you can give me like 15 seconds, I'm going to wrap things up and then I'll let you get out of here. So listen, Going Long family, I mean, Mindy shared so much. She gave you a master class. We thought it was going to be like a 101 class, but she gave you a master class on the self-directed IRAs, things that you can consider if it's the right thing for you, if it's not, prohibited parties, different types of things that you can put in, or the 3 that you can't out of everything else, helping you to understand about navigating the gray areas with your advisors, tax, legal, and bringing the team together. So, she gave you a lot of things to think about, a lot of things to talk about. Take the episode, re-listen to it, share the episode with family, with friends, and then you all get on a phone call and talk to Mindy and how she can help you with your self-directed IRA. So while you're doing that and taking action, I'm going to be here preparing the next conversation. So until then, go out and make it a great day. And thank you very much. Trust that you enjoyed today's conversation. And once again, today's conversation was sponsored by First Generation Capital Partners. If you're an accredited investor and want to find out more about how we're helping accredited investors to gain their personal freedom even faster, go to firstgencp.com/going long.